Raamdeo Agrawal, Managing Director and Co-founder of Motilal Oswal Security Johnson. Now, Raamdeo, what is the view on the market? Do you think majority of the correction in India is behind us and the underperformance could correct itself?
I think we have a lot of things happening. Counter forces are there in the sense that we have political headwinds, a lot of political activity in next 12 months, 18 months. We have little higher valuation, we have foreigners selling. But on the other hand, we have the economy picking up. We have seen the IIP, we have seen the GDP numbers. What I am seeing from the companies is that it is spreading in the sense that recovery in the economy is so we have a positive outlook on the earnings. The domestic flow is very good. So all these counter forces, but eventually the current slightly higher valuation must correct to make the market very healthy. So I would think that some more correction, even time wise, even if it is not by levels, even if time wise if we stay here for 2-3 months, 4 months or little lower, I think that will make the market very, very healthy.
Everyone is talking about earnings recovery. Do you even think that market should not really be worried about earnings recovery? They should be focusing on the political outcome more?
It's very difficult to figure out what market will do, because markets keeps resetting the expectation every day, every minute, because one election in Bihar or UP that resets the expectation for the May. So I would think that the market is very dynamic, but I think the real driver is the earnings. If there is a very strong recovery, better than what the market has built in today, I think market will tend to firm up higher, or at least it will not fall.
Raamdeo, morning. PSU banks clearly after the PNB scam have been in a spot of bother. But irrespective of the recent correction, would you say that investors need to still be wary and there could still be accelerated selling even in the pipeline for PSBs?
So long as it is not systemic problem, it is only one branch, one bank. Of course, it's a large problem. It's for the entire asset category. It has been classified as a big red flag. But I think as the time passes and the system says that no, it's a problem confined to one branch of a bank, then of course the markets will get reconciled to that. I would think that it's so far what I've seen that it is a operational gaps in a operation of a branch in a bank, though the size is very large.
So what could be a fallout of, this murky move across PSBs? Could we see money actually flow into private banks or NBFCs as opposed to PSBs?
See, the trend has been going on right from 95. This is a 20-year story where when they opened the gates for the private sector banks, clearly the value migration started from public sector banks to private sector bank. So it has been, they have been losing share in the credit market, in the fee market, in profit market in toto. So they have been losing share. This particular event, does it further, does it accelerate the migration? It's a difficult question to say, because if it is managed well, then I think the pace at which they were losing, they will lose at that pace, and the private sector in any case was doing very well. There was no dearth of business for them. All of them are growing at 25-30%. I think most of them are operating at their full capacity. So even if the opportunity becomes a little bigger, I don't think they can do significantly better.
Do you think insurance is the sector which is at the stage where private banks were, let's say, about 10-12 years back?
Yes, so this value migration of from PSUs commanding heights of 80-90% share or almost 100% share to more like 60 and then 50, that process is still on, and that is on in say even in mutual funds. UTI was the only mutual fund company till about 92, and then the private sector started coming in. Now you see bulk of the mutual fund is in private sector, and that to domestic private sector. Even foreigners have fled from here. So same was in If you look at insurance, private insurance and life insurance, general insurance, and banking of course is happening. So wherever there was a 100% monopoly in the financial sector, whichever segment, I think it is giving way to more efficient, newer business model from private sector.
Can you speak about mutual fund flows? Are you getting a sense that mutual fund flows could now be sticky given that markets are no longer in this free-flowing mode?
Till February we have got very healthy flows, and I mean recently in the month of March, more in the second week and all, we have seen some slowdown. But I think broadly I am meeting investors day and night. I don't see any concern. In fact, they are looking for opportunity to put more money if the market corrects a little bit. So I think on the whole the investor sentiment is very positive and very stable. So I don't see any impact of this entire thing any significantly on the liking for equity and the mutual funds.
Okay, Saurabh Mukherjee joins us now, represents Ambit Capital. Saurabh, good morning. Thank you for joining us. Now, Saurabh, the correction started in India because of global factors, but globally things are looking stable and they are looking up, but locally